Activity-based costing. Again, the main purpose for activity costing is to provide managers with the cost information so they can make those strategic decisions which can affect the capacity, or how are we using the fixed cost and how are we using the variable cost. Activity-based costing, what I want you to understand, is the good supplemental system to the traditional costing system. For that reason, we have to run both systems. We cannot eliminate traditional costing system. Traditional costing system is the one that we calculate in predetermined manufacturing overhead and applying the manufacturing overhead based on the actual usage of the allocation base that we choose for the calculation predetermined manufacturing overhead. What's the differences between activity-based costing and traditional costing? In the traditional costing, we're chasing only and only manufacturing cost. Non-manufacturing cost, we treat it as a period cost. Where in activity-based costing, we're gonna look the manufacturing cost, but we're also gonna look for non-manufacturing cost. We're gonna try to allocate some of the non-manufacturing cost to our product. The second difference is, in traditional product costing system, we allocating everything which is manufacturing overhead. All the manufacturing cost, we're allocating it using the traditional costing system. In the activity-based costing, we're not allocating everything. We're allocating only the cost which are related to the product. So we can get most of the manufacturing cost, but we're also going to get some of the non-manufacturing cost as well. The third difference is how we're going to calculate the usage of the cost from our product. Traditional costing system, again, using the manufacturing overhead rate, which manufacturing overhead rate can be on the different level. The entire company is going to have one manufacturing overhead rate, which will be based on the total cost for the entire company. Because of that, that's not going to be very accurate for the single departments. But if we go to the department level, we can calculate the manufacturing overhead for the specific department. And that manufacturing overhead rate will be more accurate and more complex to calculate. Activity-based costing will be the most accurate, but it's going to use a lot of cost pools. That's why the level of complexity will be too high. In activity-based costing, cost pool, we're going to have the unique measure of activity. Where in traditional costing system, we only relying on the volume measures, such as direct labor or machine hours. And based on that, we're going to allocate all the overhead cost to the product. The fourth difference is how exactly the activity-based costing differ from the traditional. Traditional costing system, again, we're using predetermined overhead rate, which is based on the estimation or based on the budgeted activity. And then we're applying the overhead using that activity. But we're going to include also unused and idle capacity into the cost of our product. Where in activity-based costing, we're going to chase the actual activity and we're going to charge to our product only the cost of the capacity that they're actually using. For the unused capacity, we're gonna treat it as a period expense. So how are we gonna design our activity-based costing? First, we're gonna come up with the activity. What will be the activity? Activity will be the event that drives the consumption of the resource, that overhead resource. Remember, what drives the electricity cost? That was our activity. Then we're gonna come with the cost pool. In the cost pool, we're gonna collect or calculate the cost which is related to that particular activity. Then we come up with the measure of activity. Now we can use two common types of measure. One will be the transaction driver, how many times that activity is used, or duration driver, what's the amount of time that we're using single activity. If you remember for the electricity that we did, we use the transaction driver and we use the duration driver. Duration driver was the number of hours that we're using the lights, where the transaction driver was the how many times we're charging our cell phone. So in activity-based costing, we're going to define 5 levels of activity. Where in the traditional, we're going to rely only on the volume measures. Which are those 5 levels of activity that we're going to identify in activity-based costing? We can start with the lowest level of activity. That most likely will be the unit level of activity. The unit level of activity is for if we have to produce one single unit. Next level will be batch level. For the batch level, always think about group of units which are combined together and produced at the same time. Then we can go to the product level of activity, which will be the entire product. Then we're going to have the customer level of activity, and the biggest measure will be organization sustaining activity. Now let's see what's the main difference between the traditional and activity-based costing. In traditional absorption costing system, we're going to have this predetermined overhead rate, again, which we're calculating based on the estimation or the budgeted activity. Because of that, we're going to have this unstable unit product cost. Where in activity-based costing, products, we're going to charge only the cost of the capacity that they're actually using. The cost of the idle capacity is not going to be transferred to the product. For that reason, we're going to have a more stable unit cost, which will be in the line of our objective to assign only the cost to the product, which are actually causing the production. Designing. Now let's design this activity-based cost system. First, again, we're going to come up with the cost object. Cost object was electricity. We're going to come up with activity, TV, dishwasher, hot water tank. We're going to come up with the consumption of the resources, how many times, how many hours, and we're going to come up with the cost for the single activity. Again, we're going to identify and define the activities. Then we're going to come up with the activity cost pools. And we're going to find the activity measures, how we're going to measure that activity. Then we're going to assign the overhead cost to that activity cost pool. We're going to calculate the activity rate. After that, we're going to assign the overhead cost to the cost object. using the activity rates and activity measure, and we're going to prepare the management report. Question for you. There's so many steps that we have to do, so many things that we have to have in mind. As you can see, we have to come up with the activity, we have to come up with the activity measures, we have to come up with the consumption, we have to come up with the cost, we have to come up with the activity rates. Why do we need to do all those things? Do you understand the idea? Why do we need to do all those things? What do you think? How this going to make us our life easier?
Well, I think it's gonna help us to determine the most accurate cost of our product, and therefore is gonna give us a more accurate result of our income, right?
That's one thing. The other thing that what we're trying to find out here, people, is how well we're using the costs that we're paying for. Do you understand this? The question is, the electricity bill came, we have to pay $100. Do we understand for what we're paying $100? Do we understand what actually drives the cost? How that bill came? We don't. Since we don't, there's nothing we can do about it. We're just going to pay the $100 and end of the story. But if we break it by activities, if we make those extra steps, we to allocate the percentage to that activity, come up with the cost with that activity, come up with the measure of that activity, come up with the cost for the single usage of that activity, then we can change our usage for that cost. We can utilizing our capacity better. You can utilizing the usage of the fridge, usage of the stove. Use them more and paying less. Use them more efficiently. The whole point is you need to understand what's the cost that we're paying for and how well we're using those costs. Because I told you before, the income is not going to come always and always from increasing the sales or increase the revenue. The income is going to come from cost savings as well. If you save on the cost, if you utilize the usage of the cost that you're already paying for, that's from where the cost saving is going to come. If you see that you're paying for the idle cost which you're not using, that's a waste of money. The simple thing will be all the clothes in your drawer that's sitting there with the labels, that's waste of money. Every time when you pay for some fixed cost, which you're not using on the full capacity, that's waste of money. Now, imagine in the company, that's in our personal life, imagine in the company how many different costs we have. How many different fixed costs we have. And your savings and your increase of the profit is going to come from utilizing that cost more efficiently for something that you already pay for by knowing how you're using it. That's the only reason that why we're doing all this activity-based costing. We're trying to go through all those crazy calculations. We to get better understanding so we can predict and we can do something about the future. So let's see how they're doing it here and what exactly is this about. This company, as you can see, they prepared this traditional income statement. Cost of goods sold is comprised by direct material, direct labor, manufacturing overhead, which is the product cost. They're generating that much gross margin. After that, they have shipping expenses, marketing expenses, general administrative expenses. And currently, they're losing $1,250. Now, what we're going to do is we're going to try to understand the costs and to look close on the costs. But we cannot change the bottom line because the period already happened. Now, the manufacturing overhead here is allocated to the product, which using the single plant overhead rate, which is based on the machine hours. We're going to see later how exactly that's applied. So what we can see here, we have direct material cost. We have direct labor cost. Those are the costs that there's nothing we can do about it. Those are direct costs, which can easily be traced to the product. Nothing we can do about it. Shipping expenses is the other cost, which is directly related to our sales. Again, there's nothing we can do about it. But we're going to pull out this manufacturing overhead, which is 1 million. We're going to pull out marketing expenses, 300,000, and we're going to pull out the general administrative expenses, 510,000. That's $1,810,000. And we're going to try to figure out, is there anything we can do about those costs? So first, what we're going to do, we're going to come up with the activity cost pools. What drives the cost? One thing that drives the cost in this company is the customer order. Every time when the customer makes an order, the cost coming. Second activity that drives the cost is the product design. Every time when we have to design the new product, when we do the product design, that drives the cost. Based on the order, size of the order that the customer placing, that's another thing that drives our cost. Customer relationship is another activity that drives the cost. The last activity is other, there always will be other. How are we going to measure it? Customer order, we're going to measure it. We're going to use transaction driver, which will be the number of the customer's order. So every time when the customer places an order, that's going to drive the cost for the customer order. Product design, again, we're going to use transaction driver, which will be the number of the product designs. Every time when we have to perform product design, that's going to drive the cost for the product design. Order size, we're going to use now duration driver, which will be machine hours. For the customer relationship, we're going to move to transaction driver, which will be the number of the active customers that we currently have in our company. That's the explanation for the customer order, product design, order size, customer relationship, and others. That will be our first stage. So what we did so far. We're not going to allocate again, we're not going to allocate material, labor, direct cost. We're not going to try to allocate the direct cost. We're going to try to pull out the manufacturing cost, manufacturing overhead cost, and the non-manufacturing cost, which is marketing administrative expenses. We're going to draw the chart with the activity, which drive those costs. And on the second stage, we're going to try to find the cost objects, which is the product, customer order, and the customers. Now, again, we're going to pull out the manufacturing overhead. We're going to pull out the general administrative expenses. and we're going to pull out the marketing department cost. That's $1,810,000. We're going to see what's those costs, from where those costs coming from. And the manufacturing overhead within the production department comes from the indirect factory wages, factory equipment depreciation, factory utilities, factory building lease. For the general administrative expenses, we're going to have administrative wages and salaries, office equipment depreciation, and administrative building lease. Marketing department, that will be marketing wages and salaries and selling expenses. Again, the total overhead cost that we try to find a way to allocate different way will be 1,810,000. We're not dealing with the direct material, we're not dealing with the direct labor, and we're not dealing with the shipping, because those we already know what drives that cost. So what we're gonna come up with? We already have our activities. We have one activity is the customer order. The other activity is product design. Next activity is order size, customer relationship, and other. We're trying to find out what is the usage on the indirect factory wages from the customer order. Now, the indirect factory wages is our cost here, and the cost has 500,000. It's $500,000. Now, how those $500,000 are used? They use 25% by the customer order, 40% by product design, 20% by order size, 10% customer relationship, and 5% on the other. Total is 100%. Total always going to be 100% because we have to allocate that cost, which is 100%. Then we're going to do the same thing for the factory equipment, factory utilities, and all the other elements of the cost. Now, once I have this, I can easily assign the cost to the customer order. 25% of the indirect factory, which is $500,000, is going to go to the customer order. 40% of the $500,000 is going to go to product design. 20% of $500,000 is going to go to the order size. 10% is going to go to customer relationship, and 5% is going to go to other. And then keep going with the next cost. Next cost is 300,000. From the 300,000, 20% is going to come to the customer order. 0 is going to go to product design. 60% is going to go to the order size. 20% to the other. And I'm going to continue this until those percentages convert to numbers. Which numbers? Cost coming from this report. Total, once I convert those percentages into numbers, on the bottom I should get exactly the same total. $1,810,000. So let's start applying. 500,000 and 25%, that's 125 allocated to the customer order. And we're going to continue. 300,000 and 20%, 60,000 gonna come here. And we keep going until we get this chart. Again, the total cost here, you're gonna see the totals from this report. We're not changing the totals. We're just allocating the totals based on the activity. Once I allocate based on the activity, now I can see the cost for the total cost for that single activity. So the customer orders, because I have that activity in my company, cost me $320,000. Product design cost me $252,000. Order size cost me $380,000. Customer relationship $367,500, and other costs $495,500. Total is $1,810,000. So since I have the activity, since I have the cost, total cost for that activity, what do I have to find out? I have to find the usage of that activity. So this company come up with the usage for that activity, and for the customer orders, they have 1,000 customers ordered during the period. For the product design, they have 400 new designs. For the order size, which is measured, if you remember the order size, we measure it by machine hours. Where was that? Let me find it quickly. By machine hours, they come up with the 20,000 machine hours. And for the last one, which is the customer relationship, we're using the duration driver of the customer relationship. We have 250 customer relationship activities. Once we have the total cost for the activity and the number of activity that we performing, we can easily come up with the cost for single activity. 320,000 divided by 1,000 orders is going to give us $320 is the cost that every time when the customer make the order. Every time when we have to do product design, that's going to cost us $630 per one design. Order size, based on the machine hours, for every machine hour is going to cost us $19. Customer relationship, since we have 250 customers, every customer costs us $1,470. Others are others. Those will be our period cost now. So what we did so far, we pulled the cost, manufacturing, non-manufacturing, 1.8 million. We come up with the cost per activity, total cost per activity, based on $1,810 million. And the second stage, we come up with the cost per single activity. Direct material, it's going to be directly traced. Direct labor, directly traced. Shipping costs, those are directly traced. Now we can trace the customer order, product design, order size, and customer relationship. Those will be treated as a purely period cost. That's on the company level. Now that's what we did is on the company level. Now the question is, can we get more information about the company? Yes, we can. So this company has two divisions. One division producing those standard sanction. That division require no new design. They have 30,000 units order with the 600 separate orders. So we know the number of the orders. Each sanction requires 35 minutes of machine time or total 17,500 machine hours. Once we have this information, and once we have the cost per activity, we can come up with a report for that sanction. So the sanction, since we have 600 customer orders and 300 is per order, that's going to cost us, that particular division cost is $192,000. They don't have product design, so we're not charging product design. The next cost is the hours. We're charging $19 per hour, 1,750 hours, that much. So for this standard sanction, cost is $524,500. Now, let's see what's the other division. The other division is customer compass housing. For the customer compass housing, we require new design. We have 400 separate orders, 400 customer designs, 1,200 compass housing produced, which require 2 hours, that give us 2,500 hours. So the 17,500 and the 2,500 hours is exactly the 20,000 hours, which will come up here for determining the activity of our activity here was, let me find it quickly, order size. So based on this information, we can prepare the same report for the next division. Customer orders, we said we have 400 orders times 320 is going to give us the cost. We have a product design, every order require new design. 400 new designs, that much. Order size is 2,500 hours times $19, we get the cost. Those are our two departments. Now the question is, can we go deeper? Can we calculate the cost per customer? Yes, we can. The only thing that we need is the information about that customer. So that particular customer have 2 orders for 150 standard sanctions per order. 1 order for the custom compass house. Machine hours has 300 standard sanction required. So since he has 2 orders, 150 standard sanction, that means 300 standard sanction, which require 175 machine hours. For the 1 order, for the custom compass housing, that require 2 machine hours because we have only 1 order. So let's see now what will be the cost. First, we have the customer order, 3, 2 standard, and 1 custom compass. That's 3 orders, 320 per order, 960. For the new design, only the custom require new design. So out of 3, 1 only is for the product design, 630. For the order size, since we have 300 standard sanction, and that requires 175 hours, 2 hours for the custom, that 177 hours. $19 per hour, give us the cost for that customer. That customer is 1 customer. So we establishing 1 relationship with that customer. For the customer relationship, we're charging 1,470. That's how much cost us. So this particular customer, we're gonna assign the overhead cost of $6,423. So as you can see, we can calculate for the company, we can go to divisions, and we can go 1 step further. We can go to per client. Now let's go back to the company. Let's prepare this management report. As we said in the beginning, we're not gonna try to allocate the direct material, direct labor, and shipping costs. Those can be directly traced to the both divisions. Once we get those direct material, direct labor, shipping, based on the both divisions, we're gonna plug the information that we get up from the activity-based costing for the customer order, product design, and order size. Once we plug that information, we're gonna see how much is the product margin that we're generating from the standard sanction. And we're gonna see how much is the product margin that we're generating from the custom compass housing. So as you can see here, right here, the standard sanction generates product margin of $906,000, where the custom compass housing losing almost $50,000. What's left? Left the customer relationship, which we're not allocating to the those because those are related only to the customers. Customer relationship, which we're going to treat it as a period cost. And other in our calculation, 490, 500 is other period cost. And as you can see, we haven't changed the net profit loss. However, now we have better understanding about the two divisions in our company and how much they contribute to the company. So here clearly we can see if we eliminate the Compass housing division, our problem is solved. So let's see now, that's for the company. Let's see what's happened with the client. The one that we calculated using the activity-based costing, we're calculating that overhead cost. Again, direct material, direct labor, and shipping, we're gonna get it because those are direct costs. We're not gonna change that one. But for the costs which we're gonna get from the activity-based costing, we're gonna assign them based on the calculation that we made. Once we add all the cost, direct material, direct labor, shipping, customer or product design, order size, and customer relationship, those are the activity that we come up with activity-based costing. We're gonna see that total cost are less than the sales. So this client actually contributes to our company. So that's a profitable client. So that's based on the activity-based costing. If we apply activity-based costing, we can see why we're losing money. Now let's try to do the same thing, but applying the traditional costing system and see what we're gonna get. In the traditional costing system, we're gonna split again the company by two divisions, standard, sanction, and custom and compass. Direct material, direct labor, those are directly traced. There's nothing we can do about it. However, manufacturing overhead, if you remember, the manufacturing overhead was $1 million. Now we're gonna try to allocate that company manufacturing overhead to those two divisions. How? Using the traditional method, which is that applying the manufacturing overhead based on the predetermined rate. How are we going to predetermine that rate? We have the total cost, $1 million. We're chasing only manufacturing cost here. Remember, on the traditional system, we don't care about the non-manufacturing cost. Non-manufacturing cost, we treat it as a period cost. We're going to get only the manufacturing overhead, $1 million. We're going to get the usage, which is the machine hours, which if you remember, we come up with the calculation of the usage, 20,000 hours. And we're going to get the $50 machine per machine hour. We already know how many hours each division using. The standard sanction was using, I believe it's here, 17,500 machine hours. The custom using 2,500 hours. And that's how we're gonna assign the cost. $50 times 7,500 is gonna go to the standard sanction. And for every hour on the compass, out of 2,500 times $50, we're gonna assign it to the custom compass housing. So, in other words, out of $1 million, we're gonna assign 875,000 to the standard and 125,000 to custom. Once we do that, we're gonna run the report. Again, we allocating only the $1 million. The other selling, administrative, marketing, and shipping, we treat it as a period cost. We're not changing those one. Shipping expenses, period cost. Marketing expenses, period cost. General administrative expenses in the traditional period cost. We're still losing $1,250. But what's happened with the standard sanction now? Standard sanction now generate $650,000. Custom become profitable. Now the custom is generating contribute to our company $258,000. Compared to the activity-based costing, that's a huge swing. On the traditional activity-based costing, standard sanction contributes $900,000, over $900,000. Suddenly, that contribution dropped down with almost $300,000. The custom losing almost $50,000. Suddenly, the custom come up with $300,000 profitable. 50,000 to go to zero, another 250,000 to come to 58. That's $300,000 swing. The question is, which one should we rely on? Shall we rely on the traditional system, where both divisions are profitable, but we're losing money? Or shall we rely on the activity-based costing, which charging the cost to our product only for the capacity that they're using? Which report is more accurate?
The activity-based cost.
Right? And as you can see here, now comparison between both traditional and activity-based costing, we have $290,000 difference between one and the other in favor of the activity-based costing. Here we have $307,000 in favor of the traditional for the customer compass. So what's happened? Traditional costing overcost the standard sanction, but undercost the custom compass. In this case, we're recording lower product margin, where here we're producing higher product margin. You as a manager now, you have to make a decision. What should I do? Which report should I rely on? Or which report should I eliminate? Now we're coming to the point, remember the example with the 3 students, that sharing the costs for the rent based on the number of the students. That's the traditional costing. If we apply how much they actually use the apartment and what will be the fair amount of the cost that they have to spend, that's a different story now. How about if they have if they're paying for the internet in the house? Should they split the bill also on the 3? Or should they chase actual usage of the internet? How about if they sharing the cost for the food? Are they gonna collect the whole cost for the month and at the end of the month divided by 3? Or should they actually chase the actual usage of the food and who's eating what? And they pay by the consumption rather than how much they're consuming, rather than on the average base, applying the traditional system. That's where we are here. Now, there are 3 reasons why the reported product margin between the 2 costing systems are different. First, traditional costing allocates all the manufacturing overhead product. Out of $1 million, we are allocating the entire $1 million, where the activity-based costing only assigned of $1 million, only the one that are actually used by the product. The one that are not used by the court, we just treat it as a period cost. Second, traditional costing allocating all the manufacturing overhead using only one base, volume related, which is machine hours. Where activity-based costing using the non-volume related. We have different drivers. We have duration drivers, we have transactions drivers, we have activity pools. Traditional costing system disregard the selling and administrative expenses and the marketing because we just saying those are period costs. We don't care about this. Where in the activity-based costing, we're tracing those costs to the product. And we're going to include of the non-manufacturing overhead cost because they simply cost the product. So we try to assign some of the marketing and the selling administrative expenses. Only the shipping cost will be directly treated as a period cost. Why do we need to do this? Again, the whole point is here. Why do we have to go? Why do we have to make our life easier when it's simple? $100,000 divided by $1,200 divided by 3, 400 each pay for $400. End of the story. Two people go to the restaurant, they pay $200, pay each of them pay $100. That's it. But there's a catch. One of them is drinking. The other one doesn't drink. One person, he ordered 5 whiskeys. The other one's drinking only tap water. Now, is it fair both of them to pay $100? Yes, it's easy to calculate. Seems fair, but is it actually fair? That's where we are. That's what the activity-based costing is going to give you. It's going to give you a report which will be very accurate and very precise and going to include only the actual usage of the capacity, of the cost, of everything, resources. And the cost that is not used is going to treat it as an idle cost. That's why we need activity-based costing if we're running, let's say, accounting company or service company, because I don't want to charge my client for the time that my employee is spending in the washroom because it's not fair. Now, activity-based management is used to conjunction with activity-based costing to find the improvements. Now, you as an activity-based manager, you have to find the activities which are not value-added activity and focus on the value-added activity. Where in the company, where else in your personal life, where else in your electricity bill. And then we can use the benchmarking, which benchmarking is to compare us with the company which are the world class, applying the world class standards, and to see how good we are compared to those people. Comparison is a good thing, but it can be a bad thing. Comparison is good only if you can draw the correct conclusions, which is going to help you to become better. Not drawing conclusions which going to make you depressed and feel bad. You not punish yourself when you're comparing with the other people. You try to encourage yourself to look like them or to do the things the way they're doing, to increase your standards, to increase your level. Again, comparison is a good thing, only if you use it for the positive purposes. If using for the negative purposes, it can be very destructive. Now, what we're going to do with this activity-based costing? Well, most of the company, they're not using it. Why? Well, those external reports are less detailed. I don't need those crazy internal reports. What do I need it for? My users are shareholders, which are owners of the company, which happen to work in the company. Why do I need these management reports? I told you in the very beginning, managerial accounting is not a mandatory. So whatever we learn in this course, you can throw it in the garbage. It's useless. You don't have to do it. The other reason, it may be difficult to make changes in the company accounting system. Remember, we have to run two parallel systems. We have to run activity-based costing and traditional system. Why? Because activity-based costing doesn't conform with the general accepted accounting principles. Only traditional is under the general accepting accounting principles. The other thing, auditors, we have this problem with the auditors. Why? Because they always suspect something. The only thing that the auditor don't suspect themselves. They can come up with the idea that, managers, when you're assigning those percentages and allocation, when you're doing the allocation, you're subjective there. You're not objective. For those reasons, most of the company, they're not using the activity-based costing. What are the limitations? Why? The other reason why they're not using it is because substantial resources are required to implement the system first and to maintain the systems. Because one thing is to implement something, completely different is to maintain it. So in order to maintain it, you have to have a fully desire to fully allocate all the cost to the product. And you have to constantly improving the system, constantly finding the loops in the system and keep it better and keep it better, keep it better. Well, but that system is going to give you reports which you don't understand. And what's going to happen? We are naturally, when we see something that we're not familiar, we don't want to look at it. Why? Because we are afraid to admit that we don't understand and we have no idea whatsoever what's this about. We just don't want to look stupid. For that reason, we are resistance. The other one is, once we don't understand something and once we don't know from where that came from, we can easily misinterpret the numbers. And the most common thing is because, hey, it's simply you have to run two systems. That means I have to hire a new person. I have to feed those people so they can run that system. Do I want to do that? Depends. Now, here we're coming to the point that depends. Depends on what? Depends on the benefits, people. You have to always understand. You have two things. You have cost on the other side, but on the flip side, you have a benefit. As long as the benefits are more than the cost, go for it. But if the cost is more than the benefit, then obviously you're not going to do it. How costly is this activity-based costing system? I mean, it can be ginormously costly. I told the other group the other day, yesterday, there's example from activity. It's not activity. It's kind of activity-based costing system. It's an inventory management control system. Inventory management control system. There's a grocery chain in Europe, Lidl. For those of you who are familiar with the Europe, probably they know it, Lidl. It's German. It's equivalent of Rio Canadian Superstore. It's all across Europe. So they ask SAP to develop for them internal inventory management control system, which locates every single goods all across the Europe, give them ability to manage their inventory in real life, and in the real lifetime, and move the inventory from one location to another location, from one supply chain to another supply chain, because they have those like Amazon, they have those supply points, the one down uh, on the exchange. I can't remember the name of the exchange, but probably when you're passing the SkyTrain between the Columbia station and what was that? Bright Station. Thank you, Bright Station. That's exactly what I'm doing. Probably you see that ginormous warehouse. That's Amazon. That's a local station point where all the goods going, and that they're using that for supplying location for the goods. So every store have those locations. So that's what they're trying to use, and fast allocate the products across the stores that they have in Europe. They spent $500 million. $500 million. They spend it, give it to SAP. SAP produce what they produce. They tried the system. They didn't like it. They paid the cost. Amazing, huh? $500 million gone. Who else using activity-based costing? We're going to eliminate the costing, but we're going to go with the activity-based management system. Who's using it? All your friends that you have. By your friends, I mean Facebook, TikTok, Google, YouTube, Microsoft, all of them using activity-based management systems. What activity they monitor? Our activity. For what purpose they monitor those activities? In order to predict and manipulate us to do the things that they want we to do. And they're very successful of what they're doing. Why? Because their database is unlimited. Now imagine adding to the equation artificial intelligence, which now here with this activity-based costing system, what we did today is with getting this electricity cost, assigning activities, assigning cost pools, assigning the percentage, assigning the cost to every activity, come up with the cost per single activity. This is what the artificial intelligence doing in the split seconds, people. We're using this activity-based costing again to predict and to eliminate inefficiency and to manage our future spendings. Artificial intelligence and all those activity-based system management system that this company using is for one reason: to predict our behavior. Now they're so good at that, so they can predict what we're gonna say to our friends in the next phone call that you're gonna make to your friends, based on the information that they already collected about us. That's how they're using activity-based, not costing management systems. Because they're not using it for cost, efficiency, they're using it for revenue generation. How they're using it. They're so sophisticated on the collecting the information and using that collected information based on the activity that you're doing, that when the person sit in front of the open, let's pretend random person somewhere in the world open the internet browser, going to YouTube. You already know YouTube using the artificial intelligence. Within few seconds, YouTube, by the clicks, by the time that you're spending to type words, by the words that you're using, language that you're using, that artificial intelligence can recognize what kind of person sitting on the keyboard. What's the age? What's the interest? Everything. That's why don't be surprised when you want to watch one video, random video, and suddenly you catch yourself that you're sitting and spending 2.5, 3 hours watching videos that you don't even know why you're watching them. That artificial intelligence can recognize how old is the kid, and it's going to start seeding that kid with more and more and more based on the activity-based management. That's how powerful this system is. That's how powerful is that simple calculation of the electricity and come up with the cost per electricity. Because at the end of the day, everything is simple. When you combine it in the more complex situation, you're getting those sophisticated systems which resources and usage is unlimited. That's your activity-based costing. That's for today.